Hello, today I'm speaking to Christian Westerhaus and Marcus Sehr of Deutsche Bank, and we're going to talk about some issues in the industry prior to EBA Day in Edinburgh, which is coming up very soon. So, you know, this is kind of challenging times for the transaction banking industry. I mean, how are banks really responding to this for their clients?
Indeed, there are numerous challenges at this point in time, both globally, if you look at Basel III, if you look at CPSS, IOSCO on the market infrastructure side, and also regionally, if we look at Europe, not only the economic situation, but also the SEPA regulation. If we look at the US, we have FATCA, and we have Dodd-Frank, for example. And globally, again, we've got FATF for compliance in the transaction banking market. So there is a variety of all these challenges. And as a global transaction bank, I see our major task and approach in providing thought leadership and market advocacy. So to understand the impacts of all these challenges in our global transaction banking market, coming from regulators, coming from the overall market environment, to understand what does it mean for transaction banking, what does it mean for our clients, what does it mean for our products. So to understand the relevance and then to transform this into our cash management product setup, for example.
And I think, Christian, you outlined the regulatory changes coming up, and they will obviously cost the banks a lot of investment budget in order to cope with all these rules and regulations. But we must not forget that there's also an essential maintenance part. So regulatory cost plus the essential maintenance cost will mean that banks have to invest in that. And so more than ever, transaction banking is becoming a scale-based business.
Yeah, I mean, has the focus on transaction banking changed recently?
Yes, definitely the answer is yes. So you have seen this not only since 2008, but basically transaction banking is providing very, very stable source of income. This is appreciated by the analysts, and you could see that the price-earning ratio for transaction banking is much higher than for other parts of the bank. So from that point of view, there's more focus from the management point of view towards transaction banking. And you will see that all the global banks will build on their transaction banking. Another aspect is that transaction banking will bring in balances into the bank, and so there's a benefit to your balance sheet. That being said, the overall pie of transaction banking services is only going alongside with the global economy. So if the global economy grows, there's more space for transaction banking. If it shrinks, there's less for transaction banking. And not everybody could be in the transaction banking space. So if you have, for example, a local or regional provider which has excellent relations to their underlying clients, may it be retail clients or importers or exporters, they have to ask themselves what they are going to do. Are they building their own transaction bank? Or are they concentrating on their skills and on their fantastic relationships and partnering with one of the global providers and leveraging the investment power of the global provider?
That's interesting. But I mean, sort of moving into the cash management business, you know, I mean, how are clients' needs met?
If I may start with the corporate side, we are working on supporting clients with integration of their own software and vendor products into cash management, so that we just not focus on our own client access channels from a product viewpoint, but enabling them to use what they have to integrate it with our solutions, which is good for their own cash management, working capital balance, and for their overall processes, to support them with using global formats, for example, in the XML space, rather than just focusing on core and basic SEPA. So to support them with what they use globally for their business. So to be the partner to our corporates with regard to their international activities. Same with regard to liquidity management. And at the same time, we are providing products to corporate customers and to financial institution customers. So we are leveraging what we have on the corporate side for the FIs and vice versa.
I think what Christian just said, these leveraging the investments we are doing for the corporate side, for the FI side, is then also a benefit we could bring to our partners, may it be a local or regional bank. They could basically let us do the heavy lifting and then take our investments and offer our investments to their clients. And with that, they avoid to do huge investments and they could benefit from the scale of a partner like Deutsche Bank.
Building on your points, Markus, I think it's also a key component that as a transaction bank, we are very clear about where we have to industrialize in order to build on the scale effects that we have. So this clear concept of industrialization with regard, for example, to onboarding, with regard to self-service. At the other hand, we have got a lot of very demanding clients that expect from us that we don't simply sell our products, but that we enable them, that we build solutions for them. For example, in the area of FX and payments, in the area of liquidity management, and in the area of reconciling their receivables.
Yeah. And Christian, you said it, we are automating this, but at the same time, we are also putting focus on the human factor. So we have our network, and this network could be also leveraged by our clients. So if you want to make a payment from Europe into Asia and something goes wrong, we have our people on the ground who would facilitate to do or to get this payment right on the ground. And this human factor is useful for us in two ways. One, of course, in order to provide service to our clients, and the other factor is that by being in the dialogue with our clients, we also hear what is their need in order to help us to design the product for tomorrow.
I mean, almost you could argue that automating services and making them more efficient makes it easier for the humans on the ground to deal with relationships and to, do their core job.
Yeah. And looking after the large complex demand of international clients.
Yeah, so we're going to move on to international clients now. I know EBA Day is all about European banking, but every bank I talk to is looking to Asia. So how are you guys looking at that market and the different currencies there?
We look at this from a core commitment point of view with regard to what are still the currencies that dominate in the inter-Asian trade. Today, this is still the US dollar with about 80% rate of all intra-Asian cross-border transactions. So continuously, we have been upgrading our US dollar clearing services, servicing at the opening hours of Asian markets, for example, providing acceleration of Asian payments when there are the peak hours in the Asia market, supporting Asia through our customer service and client service models.
And I think your question was geared towards what are we doing with the renminbi? The answer is yes, we are on the ground. We are on the ground in Hong Kong and we are on the ground in Shanghai. But as Christian said, in these days, it's not the renminbi which is dominating the trade between Europe and Asia. It's the euro, and it's coming from Asia, predominantly the US dollar. And here we are providing our clients with a harmonized offering across the euro and the dollar product suite, so that whatever the client is doing with us, regardless euro or dollar, they have the same service, they have the same product, and they have the same people to talk to about these currencies.
Of course, we have been leveraging very strongly our presence in Asia, in China, in mainland China, in Greater Asia, with regard to the renminbi. So we have built up project teams that have deployed full renminbi services over the last 2 years, be it renminbi clearing for FIs, where we have started, when we started, we looked into Hong Kong and deployed services out of Hong Kong, but also on the trade finance side and on the cash management side for corporates. One key aspect with regard to the renminbi is the regulatory side of it. So we are in daily contact with our colleagues on the ground in Asia to be sure about the regulatory framework, to be sure about rules that are changing, I wouldn't say continuously, yet far more quickly than we are used in Europe. If we look at a development in Europe like PSD or SEPA regulation, this shouldn't have been a surprise to anyone, because you have so long build-up periods. You've got fixed determination times until these things come into regulation. That is different in China, where the regulatory environment is very dynamic. And here, through our network in China, in Asia, we are constantly dealing with that and leveraging this insight, this expertise also, for example, but not only in Europe, for our corporate clients, to advise them about them using renminbi, be it for one-off transactions, where they do financial market transactions and they transfer big amounts, one-off, where we do handheld payments, or simply for commercial use of renminbi, where corporates are now starting to receive renminbi invoices or to get paid in renminbi, which is still a low number of transactions. However, we've been working through these scenarios with our corporates, and our colleagues in Asia, in China, have been most helpful in giving us that expertise, that knowledge.
Maybe to add on what Christian just said and looking a little bit what you asked earlier, I think the developments in Asia and in particular with the renminbi are a perfect example why partnering makes sense in transaction banking. So you touched on the developments in the Eurozone, SEPA, PSD and all the others. And I think many of the European banks were very much focused on the inter-European market. And they haven't looked what's going on in China or what's going on in Asia. And they must not forget their clients. And you see at the same point, the trade within Europe has shifted a little bit towards the trade between Europe and Asia and Europe. And so at some point, banks need to be in a position to also offer these kind of services, meaning renminbi services or the transactions into Asia. And while the focus was on Europe, somebody who would partner with us would automatically get the reach by leveraging the investments Deutsche Bank has done and by leveraging the network Deutsche Bank has already built there on the ground.
Yeah, no, I agree. I think partnerships and collaboration are a big issue, trend in transaction banking. So, I mean, looking at transaction banking, I mean, how is Deutsche Bank making these services easier for clients to use?
We are providing a harmonized product suite to our clients. So Christian just touched on Asia, and he said that there the ratio is around about 80 to 20 in terms of usage of dollar and euro for international transactions. Globally, it's around about 35 to 35, and our products are designed to be pretty much the same on the euro and on the dollar side. So we have the same products, we have the same front-end systems, and we have the same people offering these kind of services, and are also there for the client to respond to their questions, or if they have any concern regarding rules and regulations, our people can answer the questions on the dollar as well as on the euro side. So one touch point for the clients.
So I'm going to go into bankers' favorite topics now, which is regulations. So, you know, I mean, looking at Basel III, and you've mentioned SEPA before. I mean, how is the bank dealing with those issues now?
If I start with SEPA, we started deploying our SEPA infrastructure around 5 years ago. That has given us a lot of experiences which we gained in terms of not only core processing, also client access, how to deal with customer preparations. So we can now benefit from these 5 years of experiences which we have gained practically. We have deployed one central infrastructure to process all SEPA transactions, and now we put basically the load on the client access channels, which I see as the most important and key task now from now on to the effect of the so-called end date regulation. And that means going through the preparations together with our clients to share our experiences with them, to advise them when they should start the preparations, and also to share the experiences of what has worked and where we ourselves have encountered difficulties in the preparations. It's simply this: bring the load on, bring the mass transactions on, and also at the same time render services to clients which go beyond the core functionality, which is, for example, helping them with their collections, to manage risk in direct debit collections, for example. So we are building this out from now to go live date of the full SEPA. With regard to Basel III, again, from a product management side, from an asset and liability management side, from a trade finance point of view, we started early to analyze the impact on our products, but also go through these impacts together with our clients. So what does the liquidity coverage ratio mean for our deposit products, for FIs and corporates alike? What does it mean with regard to guarantees and letters of credits, for example? So we are not only analyzing, but also evaluating and preparing our product and solutions response to this. And we are in a dialogue with our clients about it.
And I think this dialogue is really key to be successful. For us to be successful, but also for our local and regional partners to be successful. Because in that dialogue, we also learn what does it mean for their clients and how we can then also customize our products for the need of our clients in order to provide further services to their importers, to their exporters, or to their retail client base.
I like that word dialogue. I think communication is one of the most important part of compliance and risk. So, yeah.
I think Christian touched upon a couple of the upcoming rules and regulations, and you see just by the sheer size of what's coming on top of what is already existing there in terms of rules and regulations, you see that there's a huge human effort required in order to understand all the different dynamics and to put this a little bit into perspective, and also then to prioritize the investment spend.
So now we're looking to 2012. What are we going to see from a product perspective?
First of all, we will continue with the harmonized offering for the euro and for the dollar side. And in addition to that, we are enhancing our product suite with a couple of interesting elements. So we will look at enhanced product capabilities for the reconciliation side, which will help our clients to better reconcile their in and outgoing payments. So a bank which is organized by several departments, the FX department, the trade department, or the retail department will benefit from working with us. Or even a bank which is very much branch organized, like you have it, for example, in India or in China. These banks will also benefit from this investment. And in addition to that, we are also going to revamp our front-end systems so that you have a similar touch and feel from what you probably know as a private or retail customer with your own device. And in addition to what Christian earlier outlined, our investments on the renminbi side, where we are looking to build the services for the emerging global currency. And looking at the transaction volume and looking at our growing market share in that space, I think we also see a very, very strong endorsement from our clients that they really appreciate the investments we are doing in that kind of product space.
So to foster the usability of our electronic front-end products, that is a key theme. At the same time, we continue to build out the solutions in which we have been market leaders, like FX payments, for example.
I think that's it. Thank you very much for sitting down with me.
Thanks a lot.
Thank you.